Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't have to, and today we are looking at the top 7 best stocks to double your money that are also fantastic long-term stocks to buy. We are also going to see what analysts think about these stocks, and specifically we are going to be talking about RBC Capital Markets analysts to see why these particular 7 stocks are the best stocks to buy right now. These stocks will cover dividend stocks, growth stocks, long-term investing strategies, as well as short-term investments due to macroeconomic factors, and this is mainly due to the complex economic and market environment that has been set forth by the Federal Reserve because of their increasing of interest rates, which are really going to benefit many banking stocks. Now, with that being said, we are only going to have one banking stock on this list, but I want you all to know that banking stocks are actually going to receive a really good upside from the Federal Reserve increasing interest rates. Now, according to RBC Capital Markets, these stocks are high conviction plays. They are long-term investments that could double your money, and they think that out of the 30 top stocks that they have for 2022, this is the top 7 stocks. You will also see a green check mark next to the stocks that I personally own, just so I can be transparent so you all can see what stocks of these 7 I personally own and which ones that I don't. Now, that doesn't mean that you should not buy those stocks, it just means that they are not aligned with my personal investing requirements and or goals for this year. But with that being said, let's jump into our first stock, which is none other than Mastercard, ticker symbol MA, and as you see, the green check mark means I do own this stock. Many people think that this company actually takes deposits or even extends various lines of credit, but that's actually not true. They are a payment processor, and they get their revenue from various transaction fees among merchants and sellers that use their technology. Mastercard's payment processing technology has been in high demand, and they have even increased their revenues by 30% and their net income by around 46% year over year, just referring to the third quarter, which is fantastic news. The growth opportunities that exist in Mastercard and even other stocks like Visa are fantastic buying opportunities right now that could double your money and are fantastic long-term investments. The RBC analyst named Daniel Perlin says this about Mastercard, and I quote, "Mastercard remains one of the best ideas in the space given our belief that investors should look to focus on long-term, secular-driven stories that provide solid organic growth with opportunities for margin expansion," end quote. And I 100% agree with this analyst on all regards. But what is Mastercard currently trading at? Well, Mastercard, ticker symbol MA, is currently trading at a stock price of around $372. The low-end price target by analysts is $360. The average price consensus is $428, and the high-end price prediction by the beginning of 2023 is $494. So as we can see, there is fantastic upside in the stock, both short-term and long-term. Overall, a total of 41 analysts that I personally have inspected are covering this stock, and 90% of those 41 analysts say that Mastercard is a clear buy right now. It also has a decent dividend of about 0.47. Which will bring us over to our next stock, which is number 6 on our list, and that's ConocoPhillips, ticker symbol COP. This company is the third largest oil company in the United States, and it has recently been going through many deals and acquisitions of various companies and of various facilities. For an example, a deal landed in early December to acquire a Royal Dutch Shell Permian property for $9.5 billion. This also comes on the tails of another acquisition that was in 2020 to acquire another Permian supplier, and that facility was around $13.3 billion. As you can see, ConocoPhillips is constantly expanding and adding new facilities to their overall portfolio, so they are both maintaining their current facilities while also expanding their overall presence. For 2022, their capital expenditure plan targets around $7 billion worth of shareholder returns, which is fantastic if you already own this stock. And if you do own this stock already, fantastic news for 2022. But again, it's not too late because 2022 just started and you could get some great tendies off of this stock. The RBC analyst Scott Hanold puts it this way, and I quote, "Variable return of cash. The scaled Permian position enhances the outlook with greater free cash flow generation, asset diversity, and development flexibility." And again, I 100% agree with this. However, I'm not very bullish on oil companies right now because I think the world is more leaning toward more green energy, and many of these oil companies are actually gasping for air and trying to switch over to more green alternatives. alternatives. However, currently, the COP stock trades at around $86 per share. The low-end price target, according to analysts, is $65, and normally we would want the current stock price to trade below the low-end price target. However, it is trading below its average price consensus among analysts of $92, so we could see some fantastic upside here, and the most bullish price target from analysts is around $117 per share. A total of 31 analysts cover this stock currently, and 74% of those 31 analysts say that this is a fantastic buying opportunity, and it also has a great dividend yield of around 2.02. So if you would like moderate growth and a decent dividend yield, this could be the stock for you, which will bring us to our next company, which is none other than Louisiana Pacific. And again, this has a green check mark next to it, which means I personally own the stock because I love the dividends that come from this stock. Also, this company is a buildings materials manufacturer, and it's in a fantastic position because as the number of home sales and homes on the market are decreasing, the demand for them is increasing, which then increases the overall prices of these homes. And Louisiana Pacific has gotten fantastic tailwinds from this and increased their stock price because all of these other things that they sell, such as these materials to build houses, have also increased. This has in turn increased their stock price by around 90% over the past year, and their third quarter revenues grew by 53%, while their net income jumped around 106% year over year. So currently this company is in a fantastic little bubble here. However, when things eventually calm down and when the supply of houses eventually meets its demand, we could see a slight pullback, but in the short term, this stock looks absolutely fantastic. The RBC analyst Paul Quinn says this about the stock, and I quote, "Over the next few years, we expect LPX's oriented strand board and engineered wood products business to benefit from continued growth in the U.S. housing market, providing incremental free cash flow that can be used to return capital to shareholders." And I 100% agree with this as well. Overall, the current price of LPX stock for one share is around $75. The low-end price target for 2023, the beginning of 2023, is $59. The average price target among analysts is $81, and the high-end price estimate for the stock in the beginning of 2023 is $105. 9 analysts cover this stock, and out of those 9 analysts, 67% of them give it a clear buy rating, with an okay dividend of around 0.9. So this is another company that currently benefits from the current market environment, along with many other bank stocks, which is going to bring us to our next stock, which is M&T Bank, ticker symbol MTB. This company has completed more than 20 acquisitions of other small to medium-sized banks since 1987, and it operates in over 700 branches. It maintains assets of around $152 billion and deposits of close to $129 billion. And with the Federal Reserve saying that they are going to increase interest rates 3 different times in 2022 and throughout the next couple of years if necessary to combat inflation, this is going to help bank stocks and banks overall, because on the loans that they are giving out, they get to increase those flexible interest rates unless it's a fixed rate. This is why bank stocks are going to be able to combat this overall, and bank stocks could be fantastic buys. Now, I personally would probably go into JP Morgan or even Bank of America before I went into M&T Bank, and this is why we do not see a green check mark next to this. However, an RBC analyst, specifically Gerard Cassidy, really likes this stock, mainly because of their acquisition that started back in February of 2021, which is when M&T Bank announced a $7.6 billion acquisition of People's United Financial Incorporated, which is expected to close this quarter. The analyst goes on to say that we anticipate M&T's pending acquisition of PBCT to deliver immediate tangible book value accretion combined with long-term solid earnings accretion, which should drive long-term shareholder value. So this is clearly a long-term play, which will also benefit in the short term from the Federal Reserve increasing interest rates. And this will affect all bank stocks pretty positively because they get to increase the interest rates on their various flexible loans that they have out and that they have given out. Currently, MTB stock trades for around $185 per share. The low-end price target by analysts is $158. The average price consensus among analysts is $183, and the high-end price target and price prediction for the stock is $215. Out of 20 analysts that currently cover the stock that I found, 45% of them think that it's an overall buy rating. However, the majority of them actually say that this is a good holding opportunity, and it also gives a pretty good dividend of 2.43. So I would say this is a good stock, mainly because it's a banking stock that is going to very effectively weather the interest rate increases, while other growth stocks and innovation stocks are actually going to pull back because of this interest rate increase. In our next spot, we have Mosaic, ticker symbol MOS. Currently, Mosaic, or MOS stock, trades at $42 per share. The low-end estimate, according to analysts, is $38. The high-end price target is $65, and the average price consensus is $47. Out of 22 analysts that I have researched, 54% say it's a buy and 45% say it's a hold, with an okay dividend yield of 0.64. This company produces fertilizers, mainly phosphate fertilizers, which are key inputs for agricultural products. The international supply strains that have hit various farmers and various companies, including fertilizing companies, have actually had these companies increase their prices quite dramatically, which has reflected very positively on their internal supplies, which has sent up the price for various fertilizers, including potash and phosphate fertilizers, by 100% and 130% respectively. Shares of MOS stock have risen about 40% over the past year, and their revenues have also increased by around 58%, give or take, if we average these. RBC analysts are also very bullish on the stock, and Andrew Wong, who is also an RBC analyst, says that the company has embarked on several transformation initiatives in the past several years, which have resulted in improved operational efficiency, lower costs, and rising cash flow. And it's always fantastic to see rising free cash flows in a company, or just rising cash flows in general. This leads us to another stock that I personally own, and that's British American Tobacco, ticker symbol BTI. Now, this company sells a variety of different cigarettes, tobacco products, and other nicotine products, and their stock has risen about 17% in the last month. They have a pretty attractive price-to-earnings ratio of around 11, which is lower than many of their competitors, such as Philip Morris International and Altria Group. It also pays out one of the highest dividends compared to its other peers and competitors, with a solid dividend payout ratio of around 58%. The RBC analyst named James Jones says that BAT, talking about British American Tobacco, is taking credible steps to develop its portfolio of new category products, such as vapor, tobacco heating products, and modern oral. He goes on to say that British American Tobacco's products prospects remained predominantly a function of the cigarette industry. So honestly, I don't think cigarettes are going to go away anytime soon, because people are highly addicted to nicotine, and with their diversification in vapor products as well, this is just going to further their market reach. The company currently trades at around $42 per share. The low-end price target is $50. The average price target is also $50, and the high-end price consensus is $51. Now, we have to take these price predictions by analysts with a grain of salt, because I only found around 3 analysts that have a consensus buy rating for the stock, and these are also their price targets. Now, I would have liked more analysts to cover this stock. However, they do have a fantastic dividend opportunity of a dividend yield of around 6.93, which is fantastic. So we get a fantastic dividend with pretty good growth from this stock, and that's why I personally own this company. Next up on our list, we have Twilio, which this has 3 green check marks next to it, because I am heavily invested in Twilio, and I want you all to know that I do have money in this stock, because I love being transparent with you guys about what I am buying and what I am selling, so you all know exactly those stocks in my videos that I do own and the ones that I don't own. Now, this doesn't mean that Twilio is right for you, it's just right for my personal projections and my personal goals for my portfolio. This company offers a fantastic programmable communications tool that really drives customer engagements overall, and they do many other things, such as they have support channels, appointment reminders, and they even have personalized coupons. Twilio became literally the world's #1 customer data platform, which is fantastic news, and I expect them to maintain this title for the next few years. Twilio's revenues also have fantastic historical data by growing at least 40% year over year for the past 9 consecutive quarters, which is absolutely amazing. The Twilio stock price has fallen around 35%, which to me, I jumped on that opportunity, and I clearly potentially double down on my position, and RBC analysts also think so because they have a current price target for the stock of around $450 for the TWLO stock. The analyst goes on to say that Twilio remains one of the fastest growing companies in software with around 50% organic growth driven by best-in-class net expansion rates, cross-selling, and new user cases. This is also one of the reasons why this is a fantastic opportunity to get in on this stock right now, and this is also one of ARK Invest's and Cathie Wood's favorite stock to own. Currently, the stock price trades for around $215 per share. The low-end price estimate, according to analysts, is $280 per share, and this is really what I want to see. It is trading way below its low-end price target for their 2023 price target, so in the next year, we could see fantastic growth even if the most bearish analyst is correct about the stock. The average price consensus goes all the way up to $408, and the high-end price target, we can more than double our money with this stock. Out of 31 analysts that cover the stock, 94% of them say that this is a fantastic buying opportunity right now, and of course, since this is a super innovative growth stock, it does not offer a dividend. But I want to hear your thoughts about these companies. Here are the companies that we went over today. I would love to hear your thoughts down below. Which of these companies do you own? Which of these are you going to look into? Or at least add some of these to a watch list. Remember, this is not financial advice and these are not buy recommendations. These videos are just for your personal information to better weather the current market condition and to make your portfolio better so you can get fantastic returns. But with that being said, remember to smash the like button if you haven't already, subscribe if you are new, and I will see you in the next YT video.